welcome to the CEC Report for the 6th of May 2016. I'm Elisa Barwick, and joining me today is Robert Barwick. Welcome, Robert.
Thanks, Elisa.
And on today's show, number one election issue, Australia's coming bank crash. And to prevent terrorism, Britain must end the al-Yamamah cover-up. Now, before we get into today's show, we want to mention that we have a slate of candidates for the upcoming federal election, and you can find out more about those candidates on our website, and we'll put them up on the screen. We've produced our latest New Citizen newspaper for the election, federal election edition, Elisa, and the Senate slate is fully displayed on the back, and some of our House of Representatives candidates, along with the CEC's main policies that we're running on, including no bail-in, Glass-Steagall bank separation, and establishing a government-owned national bank, and that's all explained there. But for more details, people can get it on our or call in
website.
For a copy of that paper. We'll send you one.
And I just should say that this is Friday the 6th of May. We're assuming that Malcolm Turnbull will follow through with his pledge this weekend and go to see the Governor-General actually call the election, so that we're assuming that. If you're watching this next week and he hasn't done it, that's not our fault, but we're getting in early just to let you know we've got candidates. And we will feature them in upcoming episodes of the show. Yeah.
So firstly, number one election issue, Australia's coming banking crash. And this is really going to become the big issue. I mean, Turnbull and Shorten are having a hard enough time right now explaining, how they're going to fund everything and various figures, but it's going to get a hell of a lot harder very shortly the way things are going, because over the last week, we've literally seen new warnings regarding the Australian housing bubble and the fact that it is going to crash sooner or later, and likely sooner. We've had falling bank profits announced. We've had the decision to again lower interest rates. And there's also been globally a number of warnings of a new oncoming 2007-2008 style financial crash from various papers and commentators. So we're going to take a look at these individually. Now, regarding the housing bubble, we'll come back to that in a moment.
Four Corners did a story on it, which we'll look at in a minute. But it just underscores, as we'll show, the inevitability of what we're talking about.
Yeah. Now the bank profits.
This is big. Our banks have been breaking records since 2008, right? Especially the Commonwealth Bank, but all of them have been breaking records. And there was a couple of interesting things about that. One is they were breaking records on profits while all the other banks in the world went into the doldrums, right? But two, we started questioning how these banks were making these profits in the state of the economy of Australia as it exists, because we're losing our major industries like our car industry, our steel industry, and all these actually important industries which create wealth. Where are these profits coming from? And what we began to zero in on, Elisa, was the derivatives holdings of our banks was the only things that were going up as fast as their profits. Their derivatives holdings, multi-trillion-dollar bets they make, completely zoomed, and they might be winning all those bets, but derivatives are not just like that. Derivatives can be used to hide losses and make losses look like profits, right? So we asked hard questions about this. Anyway, so that's what it's been like since 2008. This year, I think, which bank went first? Westpac announced at the start of this week a profit which was 3% below expectations. That's like, oh, well, all right, these guys are normally better than that. The next day, on budget day, ANZ announced a profit that was 25% below expectations, and no one predicted that could be possible. And I was watching Sky News when it was announced, and the anchor woman on Sky News, her face just completely dropped, like in shock. She didn't realise she was on the screen, but she explained later she'd just seen the ANZ profit announcement. So these are early signs of something happening, and it's going to tie in with the property market, because that's the business of the banks. They're the most exposed to property of any banks in the world have ever been exposed to property. Yeah. Right.
And it relates, of course, to the interest rates as well, therefore, because we now have a rate of 1.75%. And remember, at the beginning, or during the GFC, Wayne Swan described the interest rates then, which were 3%, as emergency levels.
So the banks crashing around the world, and our Reserve Bank quickly dropped interest rates to 3%, and that's what the Treasurer said. These are emergency levels. So last year when they went to 2%, we said, well, if 3 was emergency, what's 2, right? Now they've cut them even further. So this is like, arm the torpedoes stuff, right? The Reserve Bank is taking this is panic. This is actual panic. You don't hear panic in their voice, right? Because they believe in this myth of confidence. You don't want to undermine confidence in the economy. By their actions, you've got to see what do they think they're doing when they're doing this. If they keep cutting like they're doing, they're going to run out of things to cut, right? And run out of options. But what is this actual state of the economy they're not telling us about that is making them take this step? And it's not just because inflation's low, right? Forget that myth, guys. They're propping up, they're making it easier for banks to cover over what's happening in their paper.
But this whole situation is going to make it very, very fruitful for us in terms of bringing Glass-Steagall to the fore. And on last week's show, we reported that a number of our supporters have made Glass-Steagall the issue. We saw that in the case of Bill Shorten, who was forced to say, no, I'm not going to be entertaining the idea of Glass-Steagall in our policy platform, and also Scott Morrison, who had to defend the idea, try to pretend that they're not going ahead with bail in a series of lies, so it's exposing them. But this came up again this week actually in an indirect way, because Westpac's chief executive, Brian Hartzer, basically warned the ALP against going with a royal commission because he said this could threaten the vertical integration of the banks. Now explain what that means.
Okay, well, on the front page of our alert service this week, Elisa, which if people want to see it, they can call in for a free copy if they haven't had one before. We just grabbed the logo from the Commonwealth Bank's annual general meeting, and you can see that there. We'll put it on the screen. This is their collection of logos, and what it shows you all the different financial businesses under the one roof, right? So there's banking, and then there's a banking subsidiary, Bank West, but then there's ComSec, which is stockbroking. There's ComInsure, which is insurance. And there's Colonial First State, which is wealth management, right? And that's what vertical integration is. It's being a conglomeration of banks, having everything under the one roof. Well, Glass-Steagall, Brian Hartzer is a Canadian, I believe. He knows what Glass-Steagall is. Glass-Steagall says that can't happen. You have one type of banking here with deposits. That's kept away from everything else. And they don't want that. And so what he was actually saying to Bill Shorten is, don't you go with a royal commission. That might lead to demands for us to be split up along the lines of Glass-Steagall.
And he particularly singled out wealth management being, investment and advice and so forth, being under the same roof as derivatives. So yeah, that's exactly what Glass-Steagall would do. And the other thing that he also warned against were any changes to negative gearing. He said this is a policy which is, quote, embedded in the decision-making process for investors for assets beyond just housing. But of course, they're particularly concerned about the housing aspect of it, which we'll come back to in a moment. Also, we wanted to mention the bail-in bonds because the banks, being in trouble, are having a field day with what is called hybrid bonds. And Westpac has just announced they will do a hybrid bond issue worth $1 billion. And as we've reported before, these are bonds that offer a much higher interest rate, so are very attractive to people. But the intention is that they will be formally nominated to be bail-inable bonds. It hasn't been formally done yet.
Yeah, what APRA is doing is allowing the banks to sell these things, and they're sucking in a lot of customers, but other jurisdictions in the world do not let their banks sell them to retail investors or normal mums and dads, right? APRA is letting that happen here. So a lot of people are getting offered, like the Commonwealth Bank earlier this year, 7.5% interest. It's like people's eyes would light up. But very soon, APRA is going to make sure Australia accords with the Bank for International Settlements rules on what they call total loss absorbing capacity. And these bail-in bonds will be designated, they'll be bail-inable, right? And all of a sudden, these people have put their money in them, and they probably won't even be informed, but they will one day find out that their savings are not worth the paper they're written on.
Exactly. So we'll stop for a moment. When we come back, we'll discuss the housing bubble. You've been watching the CEC Report, the weekly TV show of the Citizens Electoral Council of Australia. What can people do to find out more, Robert?
Well, they can get on our website, www.cecaust.com.au. Or they can call our toll-free number, Elisa, to order a copy of this. The Australian Alert Service, which is our weekly publication where we write up all the material we use. That number is 1800 636 432.
Welcome back to the CEC Report, where we're discussing number one election issue, Australia's coming banking crash. So on the 3rd of May, last Sunday, was a Four Corners special feature called Home Truths. So this was on the Australian housing bubble, and there's been a series of warnings, and we've talked about all of them on the show.
They're coming thick and fast now.
Building up to this.
That's a sign itself.
Up to this point. So just a few of the key points that this show laid out included the fact that investors are crowding first homeowners out of the housing market because, particularly because of policies such as negative gearing and capital gains tax. The way the whole system has been geared is to allow, encourage maximum investment, people buying and flipping houses and properties.
They showed footage of these young people who go to these seminars where real estate spruikers are telling them how to get into the market. But the spruikers are telling them and explaining it's much easier for these young people to get in as investors than as home buyers.
Yeah, right.
Right? And then of course they show all these examples of people who've bought an investment property, get it revalued up, that higher value allows them to borrow more to buy another one, that gets revalued up, that can buy another one, that gets revalued up, and this is just a disaster waiting to happen, and the banks are right in the middle of it because they keep making those loans on each step of the way.
Yeah, and so 50% of home purchases these days are by investors. They go through the figures that basically if you spent your entire income for a year to buy a home, in parts of Sydney you could spend up to 29 years doing that with every penny going towards it to own your own home. So obviously no one can do that. So if that's 30 years, even at that rate, obviously no one ever is going to own their own home. And also they talked about banks doctoring income figures on loan papers and things of that type in order that they can rebundle and sell these mortgages.
Because the banks rely on foreign investors giving them money, and the foreign investors are assuming, Australian banks only make sound loans because they see this AAA paperwork.
Yeah.
And there's huge questions over that. And we've worked with Denise Braley from the BFCSA in Western Australia, based in Western Australia, and she's blown the whistle and other groups on how much of this paper doctoring goes on.
Yeah. So we're just going to watch a short clip of this and then we'll come back to discuss it.
Amy Reynolds is a strategist with a Singapore-based capital fund. It's one of the funds that's shorting Australia's banks, a multi-million-dollar stock market play betting that Australia's banking sector is headed for a fall from its exposure to the mortgage market.
According to pretty much any housing market indicator you want to look at, house prices in Australia are significantly overvalued, and we see it as having deviated from normal values and long-term averages by about 40%. So we're expecting this kind of fall to take place in the housing market. Then we've got things like...
She's talking about indicators like the price-to-rent ratio, debt to GDP, the proportion of investor loans, at levels close to or above where they were in other countries before their housing markets collapsed. Most of all, the price-to-income ratio, the gulf between what houses cost and what people actually earn. In Ireland, the price-to-income ratio was 8 just before its housing market collapsed. In the US, it was 5. In Sydney, it's now 12.2 times the median salary. In Melbourne, it's almost 10.
So as that shows, our property bubble, our market here, is at least 40% overvalued, probably conservatively.
And shades all these other ones that already did crash.
Yeah. But what would be the impact on the Australian banks if this blows?
Well, I want to use the example of Ireland, in which the clip showed as well. In our latest alert service, Elisa, we run an excerpt of the book from Michael Lewis, who authored The Big Short. He wrote a follow-up called Boomerang the Meltdown Tour, and he goes to all these countries that were bankrupted by the financial crisis, including Ireland. And when you read the section on Ireland, it's stunning the parallels between Ireland and Australia, the psychological parallels. And in Ireland, there was, up until 2008, there was one man, a professor at the university named Morgan Kelly, who was the only person saying, this is a house of cards we've got here, this is all going to crash. And the first thing he did was he didn't even look at the economy, he was too busy doing some other arcane subject. And he finally decided to look at the property market because he noticed all these housing developments that had been built that were sitting empty, these brand new ghost towns, right? And in the Four Corners clip, Four Corners, we'll put this on the screen, showed these apartment buildings in Melbourne where there's lots and lots of them in Docklands, where they go there at night and you can see how many lights are on in these apartment buildings, and there's hardly any. 5% are lit up because they're empty. And these have been there, we live in Melbourne, these have been there for a long time now, right? Then no one's living in them. So this is the same thing in Ireland. So he first forecast, well look, the property prices are going to crash by 40 to 50%. And then later on he said, well hang on, that's an issue, but the bigger issue is what that does to the banks. Because they're the ones that have made all these loans. And then he said, look, our banks are going to crash. And right up till the end of September 2008, people were arguing with him. Oh, no, our banks are sound. Our banks are sound. The Irish banks are very sound. And he said, no. The problem is they've got this exposure to the market. And he was the only one saying it, and he was proved to be completely right because a little while after that, the Irish banks completely crashed. The government had guaranteed them, like the government in Australia implicitly guarantees our banks. The Irish government had guaranteed them, and all it did was bankrupt the Irish government, and then the European Union forced all this austerity on the people of Ireland, and they've had a miserable time ever since. Well, there's so many eerie parallels to Australia. That is what we're faced with. Get your head out of the sand. The signs are too obvious to deny anymore. You're kidding yourself. Denial is a function of fear, right? So if you're in denial, admit you're afraid, and then join our campaign for Glass-Steagall so we can intervene in this now and stop this destroying the whole country when it happens.
So we're going to stop there, and after the break we'll have a slight change of subject and talk about how we could potentially get a breakthrough to end international terrorism. Welcome back to the CEC Report. To prevent terrorism, Britain must end the al-Yamamah cover-up. Now, we'll explain what al-Yamamah is in a moment. You've probably heard about it if you listen to the show regularly, but 9/11 is why it comes up. In the United States recently, and we reported this a couple of weeks ago, there's been quite a dramatic shift to get a desire to get to the truth about 9/11, who was behind it. And there's a particular document referred to as the 28 pages, which is key here, and this is actually 28 redacted pages of the report of the Joint Congressional Inquiry, which reported a year after 9/11 basically on the evidence of what was and who was behind this. Now, in the recent period, there have been extremely high-level calls for those pages to be released, to be made public, and that includes all the key congressional leaders of both parties in the United States. There have also been, as we've reported, other documents that have been released, such as the famous Document 17, that also name names and in particular refer to the Saudi connection behind 9/11. Now, leading figures, including Bob Graham, former senator who chaired the 9/11 Congressional Inquiry Report, have basically stated that there was a massive cover-up by the US government and by the FBI, and we're just going to listen to a clip of him pointing to that.
Do you believe that consecutive administrations have been protecting the Saudi royal family against the interests of United States citizens?
Yes, and I think it's been more than a cover-up. I think it's been what I call aggressive deception. There are instances in which the FBI has publicly released statements which I know from personal experience were untrue. They stated that in this Sarasota situation that they had completed the investigation, that the investigation determined that there were no connections between the hijackers and the prominent Saudi family, and that they had turned over all of this information to both the congressional inquiry and the 9/11 Citizens Commission. I know for a fact that none of those three statements are true.
Let me get this right, sir. You are alleging that the FBI deliberately lied about this issue and that there has been a cover-up.
It's more than a cover-up. The FBI misstated what is in their own records relative to the situation in Sarasota.
What do you think needs to happen?
I think we need to have a general reopening of the investigation into 9/11. Both the Congressional and the 9/11 Commission operated under tight time restraints, which precluded the full inquiry that needs to be held when the 9/11 issue is reopened.
So this was an extremely high-level cover-up, and as he referred to it, aggressive deception took place. Now, there's a parallel cover-up that also occurred in the United Kingdom. The British Serious Fraud Office, the SFO, had initiated an investigation of al-Yamamah in 2003, but it was shut down in 2006 by then Prime Minister Tony Blair.
So al-Yamamah, Elisa, is an arms deal, and it's actually the biggest in the world by any country. It's certainly the biggest between the British and Saudis, but it is the biggest just by any measure. And it started in 1985. It was negotiated between Margaret Thatcher on behalf of British Aerospace, now BAE Systems, and Saudi Prince Bandar bin Sultan, who was the son of the defence minister at the time. That Prince, Bandar, is named in the 28 redacted pages. We'll come back to him in a minute. The deal was BAE Systems would provide these fighter jets to Saudi Arabia in exchange for a tanker full of oil, 600,000 barrels of oil every day for the life of the contract. And that contract is still ongoing, and it started in 1985. So those tankers of oil have added up to billions and billions and billions of dollars. In 2005, BAE said they'd profited $43 billion to that point. So it's even more than that now. But it created a slush fund as well, because the difference between what BAE could claim the oil was worth to them and what they were to sell it for, that was this gap that they could use to generate a slush fund. And that led to kickbacks that were being paid to Prince Bandar and his agent Wafiq Saeed and a whole bunch of other people. So this came under scrutiny, how these kickbacks were working. And the Serious Fraud Office started investigating this, like I said, in 2003. And then all of a sudden, in 2006, December 2006, Tony Blair intervened and said, shut this down, and within a week it was shut down. And here's why. Because the key people that were being investigated on al-Yamamah have turned up in the 28 pages, right? Because, and the most gratuitous, grievous example of the link between al-Yamamah and 9/11 is there was, BAE Systems had an account at the Bank of England. The account was administered by the Ministry of Defence. They administered the BAE's account. From that account, money was transferred to Prince Bandar, who was then the ambassador to the United States, in Washington, to his bank account in Washington.
That Riggs Bank.
Riggs Bank. And from that bank account, the 28 pages have revealed, people have know that's in the 28 pages. From that bank account, Bandar and his wife transferred funds to two Saudis in San Francisco who were later identified as hijackers on 9/11. Right, so this is the British government overseeing a transfer of money that ends up in the hijackers of 9/11. That's been in the Panorama reported that in 2007. It's well known, but people would say, oh, you can't do much about it, etc. It's been shut down. Well, in the light of this breakout on the 28 pages in the US, this should be reopened in the UK, because if it's not, they're protecting a terrorism apparatus that's threatening the lives of people in the UK, in the United States, in Europe and in Australia.
Absolutely, and you can find out more about that in this latest Australian Alert Service. Call in for a copy, because Prince Charles is right in the middle of it, and that's the key reason.
Bandar is his very close friend, invited him to his wedding, and he handles the al-Yamamah deal.
He's the head of that contract, and he negotiates it with the Saudis. So thanks for joining us for this week's CEC Report. Thanks, Robbie, and join us again next week. You've been watching watching the CEC Report, the weekly TV show of the Citizens Electoral Council of Australia. What can people do to find out more, Robert?
Well, they can get on our website, www.cecaust.com.au, or they can call our toll-free number, Elisa, to order a copy of this, the Australian Alert Service, which is our weekly publication where we write up all the material we use. That number is 1-800-636-432.